Welcome to BigONE Weekly News Update. I'm Gavin. While global equities continue to push higher, Bitcoin is entering a period of consolidation as two of its most important demand drivers lose momentum, creating a market caught between growing institutional integration and a temporary lack of catalysts. Bitcoin extends losing streak. Bitcoin fell for a third consecutive week, dropping 4.3% to briefly trade below $73,000 before closing near $73,600. Ethereum declined 4.5% to around $2,000. Hyperliquid's HYPE token surged more than 16% to a new all-time high, while BNB gained roughly 8% to reclaim $700, highlighting selective investor focus on high-momentum projects. Global markets rally while Bitcoin lags. Macro markets painted a very different picture. Comments from U.S. President Donald Trump on a potential Iran resolution boosted equities. Oil fell sharply, treasury bonds rallied, and the dollar weakened. The S&P 500 gained 1.43% for its ninth consecutive week, while the Nasdaq surged nearly 25% over the past 2 months. WTI crude dropped almost 10% for the week and nearly 17% for May, yet Bitcoin failed to participate meaningfully. ETF flows turned negative. U.S. spot Bitcoin ETFs saw $733.43 million in net outflows in a single day, erasing gains since late April and pushing year-to-date flows negative. It was the largest daily outflow of 2026 and the fifth largest in ETF history. Institutional attention has shifted to AI, semiconductors, and tech infrastructure, reducing Bitcoin's share of risk asset flows to its lowest since spot ETFs debuted in early 2024. $1 billion trade goes unnoticed. The largest IBIT block trade ever, 29.2 million shares worth $1.3 billion, executed off-exchange with minimal market impact. 2 years ago, a trade of this size would have caused major volatility. Today, it reflects Bitcoin's deep integration into institutional infrastructure. Two demand engines are slowing. Both ETFs and strategy have slowed. Strategy's pace of Bitcoin accumulation has dropped, and CEO Michael Saylor noted the company may sell BTC under certain conditions, likely to raise cash. Without strong inflows, Bitcoin struggles to generate short-term momentum. Bitcoin behaving more like gold. Bitcoin's volatility and correlation increasingly resemble gold. Since geopolitical tensions rose in March, BTC has outperformed equities and delivered diversification benefits valued by institutions seeking alternative assets. For big investors, Bitcoin is now less about tech stock-style returns and more about serving as a gold-like portfolio hedge. Conclusion: Bitcoin sits at a crossroads. Institutional adoption and market infrastructure are maturing, yet ETF flows are negative and strategy's accumulation is slowing. The market is not panicking, but awaiting catalysts. Bitcoin is transitioning from a high-growth narrative to a mature alternative asset, digital gold, and its next phase may be defined more by portfolio utility than speculation. Join BigONE today and take advantage of the growing cryptocurrency market.